Hello, it's Randy Bongard with Price Mortgage, your mortgage advisor for life. Hope you and everyone in your family had a good 2024. It's amazing how fast a year goes by as you get older. No fun. Here's a quick update on where things currently stand in the real estate market and in the world of mortgage lending at the end of 2024. Let's start with the Valley real estate market. To keep it simple, I will give you some general market trends. As always, it really depends on what specific area of the valley you were talking about and what size home you were talking about. But for the most part, this year was a year of leveling off for the real estate market overall. I think technically the median sales price only increased a little more than 2% over the last 12 months, which was about the same as the rate of inflation. The Cromford Market Index is currently at 86, which is a slight buyer's market. 90 to 110 is considered in balance. More specifically, there are 12 submarkets that are statistically buyer's markets, 7 that are in balance, and 10 that are still seller's markets, albeit slight seller's markets. Generally speaking, the farther out you go, these markets are more buyer's markets, whereas the closer in you go, these markets are more seller's markets. But this is always the case. As a side note, there have only been 3 buyer's markets in the last 24 years, and 2 of those were pretty short-lived. Sellers don't want to sell in a buyer's market, nor do buyers want to buy in a buyer's market due to the drop in home values. The total number of transactions continues to hover at lower levels, which is most attributable to people staying in their homes longer because they have mortgage rates in the 2s, 3s, and 4s. Thus, there are not nearly as many move-up buyers as there have been historically. And even for those looking to downsize, because the price of homes is more and the rates are higher, the total monthly mortgage payments are about the same or more for a smaller sized home. So they're staying put as well. Most of the buyers in today's market are first-time home buyers, newly married couples, as well as divorced couples and investors. The biggest issue holding most buyers back is the difference between buying and renting. It is still somewhat cheaper to rent than buy today. The Cromford Market Index for demand is currently 77.2%, which means demand is approximately 23% below what is considered normal. Conversely, the supply of homes has continued to increase, albeit still at lower levels. The Cromford Market Index for supply is 86.8%, which means the supply is approximately 13% below what is considered normal. Note, a big component of the increase in supply this year has been condos. This is mainly because the cost of homeowners insurance and HOA dues are going up a lot, and this is not expected to change anytime soon. While there tend to be some price negotiations taking place on home sales today, most of the negotiations are having to do with seller concessions, paying to buy the buyer's rate down and or paying for the buyer's closing cost. Homes are still selling for approximately 98% of their last list price on average. For homes that are truly great homes to sell, i.e. they are in great shape and highly sought after location, these homes are still receiving multiple offers with little to no price negotiations or concessions, but these are the exception. The Valley is super strong economically. It is still experiencing a lot of very positive economic development news, i.e. a lot of new companies moving into the area, which means more demand for houses. While builders continue to build more homes, they are building at normal levels. The biggest challenge buyers are facing continues to be affordability, but we don't anticipate this will change much in the foreseeable future. So what do I think will happen in the real estate market next year? I think it will be about the same as this year. I think the Cromford Market Index will continue to slip a little bit, especially the first few months of next year. If, though, mortgage rates drop a little, this will generate more buyers, which will stabilize the market. And I think homes will appreciate around the same rate of inflation again. This is our market, and I don't think it will change much for several more years. I want to briefly restate what I said previously about the National Association of Realtors and the class action lawsuit that has generated so much national media attention for most of this year. In my personal opinion, I think for the most part, it will be business as usual. There are many procedural changes that have taken place that agents are getting used to, but most home sellers are still going to be willing to pay a buyer's agent a commission for procuring a buyer for their home. I do, though, think the standard commission split has come down from 6% to 5%. It's all built into the sales price anyway, which can be negotiated. Now for mortgage rates. Generally speaking, Mortgage rates are in the sixes, with conventional being in the mid to upper sixes and FHA VA being in the low to mid sixes. Jumbo loan rates are in the sixes as well. Mortgage rates dropped in August and in early September. Conventional rates got into the upper fives, but when the Fed announced their first 50 basis point rate cut on September 18th, mortgage rates started to increase. And to everyone's surprise, mortgage rates increased about 1% over the next 60 days or so. Rates have improved slightly since then in the last couple of weeks. None of us know what rates will do from one day to the next. Heck, the true market experts have been wrong numerous times over the last 2.5 years about when rates will drop. We are still hoping rates will come down a little next year, but we are less confident of this. Even if they do, though, no one is anticipating more than a 1% drop in rates, i.e. back to where we were in August and early September. Getting mortgage rates back into the fives would stimulate a lot of activity in the market. There would be a lot more sellers willing to sell and buy another house, and there would definitely be a lot more buyers wanting to buy. For them, this would make mortgage payments on par with rent payments. So at this point, it would make a lot more sense to buy. Unfortunately, the rate drop back in August and early September was very short. Thus, many of you who have interest rates above 6% didn't want to refinance yet because you wanted to wait for rates to drop even further. This is what we expected to happen too. Well, that didn't happen. So many of you didn't refinance. I would definitely respond much quicker next time should rates start to come down a little. Remember, if you refer someone to me and we fund their loan, either a purchase or a refinance, we will mail you a Visa gift card for $250. We truly value your referrals. Hope this information helps. If you have any questions, want to discuss your particular situation further, or would like me to run some numbers for you, please give me a call, 480-580-LOAN. Thanks.